and gentlemen, good day and welcome to the H1 FY2024 results conference call of Digikore Studios Limited, hosted by Kiran Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Gopal Chandak from Kiran Advisors. Thank you, and over to you, Mr. Chandak.
Thank you. On behalf of Kiran Advisors, I welcome you all to Digikore Studios Limited H1 FY24 Concall. From the management side, we have Mr. Abhishek Moore, Chief Executive Officer and Managing Director, Mr. Srinivas Bide, Chief Financial Officer, Mr. Pramod Jain, Chief Financial Advisor, Ms. Heni Ahuja, Company Secretary and Compliance Officer. Now I hand over call to Mr. Abhishek Moore. Hand over to you, sir. Over to you, sir.
Thank you. Welcome everyone to this conference call. I really appreciate you taking the time to join this. We are very proud that we are progressing well based on our forecasts and our plans. We are very much on track, and we are looking at a much better future for the company. As we all know, there is a lot of traction in the visual effects industry and the film industry in general. And Digikore being a prominent player in this industry, having been in visual effects for over 14 years now, we are among the more respected and more well-known studios across the world of filmmaking. That gives us definitely a huge advantage in an industry which has substantial entry barriers. As you must have already seen during our filing and in our various calls, we are among the very few studios in India who are audited and approved by TPN, Disney, Marvel, Netflix, Amazon, Apple, Paramount, Sony, Warner Brothers, and most of the large production houses based in the US and Europe, obviously. A majority of our revenue, or I would say almost all of our revenue, comes from overseas business, and the business is substantially growing with hyper growth of the OTT platform, which is led by the OTT platform, and we are being benefited by that. The results for FY20 first half 24 are outstanding in its own way. We are very proud of what we have delivered. We stand by our commitment to deliver the best results by working hard towards achieving our goals. I am now putting the floor open to any questions that you may have on the results.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may please press star and 1 on their touch-tone phone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Pranay Jain from Deal Wealth Capital. Please go ahead.
Good afternoon, team, and thank you for the opportunity. Am I audible?
Yes, sir.
Yes, you are.
Great. Congratulations on successful listing and a robust first of the year. I have a few questions primarily relating to understanding of the company and some indicative numbers if you can share. So first, as I see, we've already clocked 70% of last year's revenue in the first 6 months of the year, and profits are even exceeding. So clearly the momentum and the operating leverage is showing. Just wanted to understand what's our contract wins so far in recent months, and how is the order book looking like right now, and is it executable over the next 6 to 12 months?
Sure, I will answer that. Hi, this is Abhishek. So a majority of our business really comes, so far as a subcontractor. So we don't have too many long-term contracts project-wise, but we have long-term clients who send us work month on month on their various projects. So if you ask me what is our order book or contract that we have for January or February, it's none right now. But that's not case that we are not used to, because our business operates on that. We have almost 80 clients who on a regular basis are sending us work. And so if you ask, so our historical client numbers will show you that average, there are clients who average out a certain number per year. And we are seeing that same trend. In fact, it's increased a little recently, because we've also added some more clients. Talking about numbers, this is something which is publicly available data, which we have announced several times, that when we started the year, we had set a revenue target of 50 crores for the company. And we are on track to achieve / in fact, surpass that number based on our first half results.
That's great. So given the large roster of clients that we have, and I'm sure we are expanding relationships, not just with the existing ones, but trying to grow new ones as well, increasing wallet share. And like you said, there is a great buzz in the OTT world. So can you tell us what are some of the key projects that we executed in recent months for which we've recognized the business revenue, and some forthcoming ones this year?
So, there are over 50 projects, but yes, the one that really stands out is the Marvels, which is releasing very soon. We are a key partner for Disney / Marvel. So, we at any given time, we are working on several projects of Netflix as well. We just worked on an Apple show, which we are towards the end. It's a very big show, which is going to be coming on Apple soon. Due to our certain, obviously you'll see our credits in that once that comes out. Due to certain non-disclosure agreements that we have, even we work on code-named projects. It's general industry practice. All communication is typically code-named till the project is officially announced by our partners. So we cannot name projects right now, but yes, the Marvel is going to be out in cinemas. That is one of the big ones that we have worked on.
Okay, and could you give us a spread of our revenue mix across movies and web shows or TV shows and commercials, just so we can understand how it splits up, and what is our expansion plan in terms of team size from what it is right now, and as we utilize the IPO funds over the next 12 months, how is it going to look like to increase our services, our capabilities, and our presence in other geographies which we are focusing on?
Sure. So I'm going to give you two mixed percentages right now. One is a mixed percentage of between episodic and film. We don't do much of commercials, honestly. So between episodic and films, it is almost 80% episodic and 20% films as of now, revenue mix. In terms of our service mix, it is approximately 70 to 75% of subcontract work and 20 to 25% direct work with our clients. When we get direct projects from Disney and Netflix and Amazon and all of these folks. Over the next 12 months, one mix that we definitely plan to change is the mix of services. So our goal is to take up over the next 12 months the direct projects to approximately at least 50% for sure. And over the next 24 months, we plan to take this to 80%. The reason being that when we get projects directly, our margins are far better. And also the average value per project that we get to work on is also much more than when we're getting subcontract work. Because in subcontract, many times it's bits and pieces of the project. How are we going to do this? We are going to do this by adding in some key talent, manpower in North America. We have already started hiring in North America, which is mainly in Montreal in Canada and Los Angeles in US, which are primary hubs for the visual effects business. In India, we plan to take our strength from the existing 400. By March, we plan to take it to 500, and by December to 600. In the US and Canada, we plan to hire approximately 40 people by March this year. We have already identified and certain of the top key talent that is going to drive our business and revenues from sitting in that region. The benefit that we're going to get by having this key talent in that region is that this is going to increase our average ticket size per project that we get. Even today, when we get direct projects, our average ticket size is much smaller because we're based in India. But with this team based in North America, our average ticket size can almost become 3x to 4x, which will also lead to substantial revenue growth for the company over the next 12 to 24 months.
Thank you for laying out your strategy elaborately, and clearly the building blocks are in place. I'll get back in the queue, but just a follow-up to what you said. One, which are the areas of service that we are going to focus on, one which is emerging and growing rapidly, whether it is 3D animation or gaming or out-of-home media? So that is one I wanted to understand compared to the areas that we are present in, where we are going to increase our efforts. And second, as you said, the direct sourcing of projects is going to be a key focus area for us. So can you give us a sense of what our pipeline is in terms of the projects that we are targeting? And because the areas that you mentioned where we are going to hire key talent is somewhere where other listed peers as well as other players are also focusing on. So it's going to be quite competitive, and I know the world is large, but how are we going to try and put our foothold and work towards this, not just for 1 year, but on an ongoing basis?
So this industry is largely relationship-based. A lot of the business that actually comes is very dependent on relationships. So as an example, if you worked with me on a project in the past, you trust my delivery capability, there's a very good chance you're going to give me your next project. We have built those relationships, and even today, majority of our projects are either relationship-driven or repeat client business or referrals for that matter. The industry is too big. Almost, 800 series are in the pipeline, in the making across all our OTT players, and this is only OTT I'm talking. If you look at television, that number would almost double. Film is another area where there is work to be done. Being a dependable player in the industry automatically gets us in front of the queue when the large studios are looking at vendors. A Marvel movie typically will never go to one vendor anyway. It would go to multiple vendors. There could be, certain of these large, big budget movies where even 15 and 20 and 30 vendors across the world are working on it. So it's not about what we are, do we stand a chance to get the business? We don't have, the fear of that. We already have the relationships in place, because of which we're getting the smaller projects since we are based in India. And the key talent that we are hiring in the U.S. obviously come with their exceptional relationships. With our talent we are hiring right now at senior level positions are the ones who are having between 20 and 25 years of experience in the industry. And, they have worked over 3 and 4 and 5 projects with the same supervisors and same producers within companies. And so they get the project based on their name as well. So these are the factors that we are looking at to obviously grow the business. In this business, the film industry, cold calling is a very, it rarely works. It's a very heavy relationship-driven business, which we understand. And our talent also that we hire, also for our BD that we're hiring in the U.S., obviously we are hiring people who have deep connects and deep relationships and have a demonstrated history, more importantly, have a demonstrated history of generating new business.
Thank you so much. I'll join back the queue, and all the very best.
Thank you so much, sir.
Thank you. The next question is from the line of Aditya Shah from CJ House. Please go ahead.
Yeah, hi, can you hear me?
Yes.
Yes, sir.
Great. Couple of questions. One is due to the writer's strike and the actor's strike.
Aditya, it's very low. It's barely audible.
This is better?
Yes, much better.
Okay, great. First question is due to the writer's strike that was going on along with the actor's strike. Did we see any, reduction on overall demand levels, or will we see that impact in coming quarters? And, when will we see that demand build up again?
So, obviously, the writer's strike and the SAG strike definitely, it's actually what happens. The production has several stages, any production for that matter, has several stages in its life cycle. It starts with the pre-production, then production and post-production. A lot of the projects which were towards completion of production or almost in production or were in completed production they finished their editing and all of that. So we weren't superly impacted in in the first half of the year because the pipeline of the post-production side was yet going on for a lot of projects. Luckily, the scriptwriter strike got over. It's been quite a while now. It's been several weeks. And as per my connects that we have in the industry, a lot of the projects have started their pre-production because, the scriptwriters are really important for that. So the pre-production has started. As we see, the SAG strike, which we are hoping by this weekend or latest early next week, it comes to an end because we are almost at an agreement. Projects are going to go on floor. Typically and historically, a lot of the industry is on a hiatus from December 15th to January 15th typically, but this year we don't see that happening because a lot of people have, lost a lot of money over the months and they do want to work over the festive season as well. And that's the general feedback we are getting. This whole story may create a dent maybe in November and to parts of December for most visual effects studios because it's rebuilding the pipeline, the production pipeline which is going to take place here. We have a strategy in place to semi-offset that lull in the production side of it because we are also in virtual production in a very big way as a company. So the impact for us, because virtual production is typically a production stage service rather than a post-production service. So using our virtual production technology and virtual production skills, we as a company will be able to generate substantial revenue. And in fact, this whole strike has become an advantage for us rather than a disadvantage as a company because of our virtual production skills and our virtual production technology. And the fact that we are at a stage, when the market is at its bottom, the investor who has the most money at that time makes the most money. Technically, as a company, we are at that stage. While a lot of the VFX studios in the US and Europe are struggling, we are at a stage where we have the money to invest, and that will result in outstanding long-term results for us as a company.
Got it. That's super helpful. Thanks for that answer. Just another question which you've kind of touched upon, but do we have any sort of broad split as to how much of our revenue is from, let's say, virtual production, animation, versus a roto, green screen kind of thing?
It's very difficult to split by service that means roto, paint, and, because within paint there can be, painting and actor. Every shot can have little components. So we don't split between when we get a shot can have roto work also, paint work also. So and it can have compositing work also, obviously. So we don't. So it's impossible to split within that shot. It's make itna roto ka kaam kiya hai. We don't need to measure that as well. We need to obviously measure in terms of हमने compositing का कितना काम किया या CG का कितना काम किया because this is the end result rather than the parts and bits and pieces that go into the end result. As a company, we do plan to focus more on the 2D aspect of it rather than the CG aspect of it. And obviously, our focus market is going to be episodic rather than the big budget movie. It's a great space, long-term project. Season after season, we have seen that we get work on. So for us, the split that we try to see is CG versus 2D. When we say 2D, that includes compositing, roto paint, and all of that goes into that.
Okay, so 2D includes the rotopaint compositing and rotoscopy, but we are more, and that's the area that we want to focus more on.
See, I'll tell you, when we do outsourced work, that is the time when we may just get rotoscopy or we may just get paint. But as we move forward with our setup in North America, which is in Canada and US, it's going to be a rare situation in direct projects that you get just rotoscopy or just paint. You get shots. You get shots to complete.
Understood.
So our focus is obviously going to be on that, where we are completing shots. But even in India, when we do direct projects, we get shots to complete. We do the whole thing in the shot.
Okay. Understood. And how we mentioned that we have a strength in virtual production, and that's, I guess, one of our USPs or some area that we are strong in. What are the couple of other areas where we think that, we have more strength in compared to what's out there? Because, there are hundreds of VFX studios out there.
In the regular VFX side of it, which is, your 2D VFX, which is going to be our area of focus, I wouldn't say that we are better than A or B or C. Yes, we are definitely better than most, but there are many who are equal than us. There could be some who are better than us also. I'm not even saying that we are the best in the world in the 2D side of it, but we are good enough. We are delivering great work, and our clients are happy. On the virtual production side of it, we do have a massive lead compared to any other studio in India and many studios in outside India as well. We have created a robust team for that, and we've been working on that for over a year and a half now, when most people didn't even know what virtual production was. And we do foresee virtual production over the years to contribute substantially to our revenues. Today, it is literally zero. But we are at a stage now where we have started rolling out. We started speaking to a lot of studios in virtual production studios in North America and Europe. And this year itself, this financial year itself, we estimate virtual production to start contributing revenues.
Okay, got it. And why is it difficult for somebody else to get into this field? Like, what is stopping them? Is it a question of the training, or you have to spend a lot to get the screen? Or
it's a different set of people that do this. So it's typically a game engine that is used in virtual production. Visual effects softwares are completely different. So it's a very big mind shift for visual effects studios to get into virtual production. It's not that you can use the same team and do virtual production. You need a completely different team for that. Your visual effects artists cannot do virtual production.
Okay, got it. And my last question here is, we're mentioning that we're going to set up a couple of offices outside of India, Vancouver, London, XYZ. But already a large part of your revenue is coming from international, and I don't think we had offices before this. So, what is the basis which we are making this, assumption that setting up the offices there will substantially help us get further business? Just wanted to understand how, we know this.
Sure. So, A is the offices also. So far, we just had, we didn't even have real physical offices per se. We had certain people who were promoting our services on the business development side of it. All the delivery was being done from India. Like I explained a few minutes back, that when you are completely an India-based studio, the mid to large scale VFX projects are rarely given directly to an Indian studio. The Disneys and Warners and Paramounts, they do not trust an Indian studio to deliver mid to heavy visual effects. For that, they need to see talent, which is production talent and creative talent, based in the US and Canada. And that's a fact. I don't completely not blame them. Because even we've done projects in the past where we struggled also with mid to high end because of the Indians don't have that much experience. And so that's not that we cannot build it, we will build it. In fact, having our team in the US and Canada, which is going to be our creative supervisors and visual effects supervisors and senior compositors. The advantage of having those is also they are going to be upping the skills of our team in India, which is great for the industry also as a whole. So for us to bag those mid to larger projects, it is important that we have certain key creative and production talent based out there.
Okay, got it. That's super helpful. Thanks, that's all from my side.
Thank you so much.
Thank you. We will take the next question from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Hello, am I audible?
Yes, Deepak.
Yes, sir.
Yeah. Hello, Abhishek ji. And first of all, many congratulations to you for the wonderful performance.
Thank you so much, Deepak ji.
So now a few things just wanted to understand. Now, you mentioned that we are likely to increase our direct project or the work from direct production house to 50% from currently maybe 20-25% in next 12 months, and maybe in 2 years to 80%. So how do we see then the margins? I mean, what's the margin differential in direct project versus outsourcing, and how then we see our margin progressing once this share increases to 80%, as direct production will have a much better margin, right?
Oh yes, definitely. We are definitely going to be experiencing much better back margins as we progress from outsource work to direct projects, and which is what we have also seen in our historical PAT margins. Every year, as we increase our share of direct projects, our PAT margins are increasing. It's a natural, thing to happen.
Correct.
Because direct projects definitely have much better margins. And outsource, typically, when you are giving it to an outsourced vendor, and everybody knows, the vendor rates in India and the cost of production. So definitely margins will increase as we move towards direct projects.
So what would be our aspirational? I mean, currently already we are at about 25% kind of a PAT margin, right?
It is 25%. We are at 25%. Our target to touch over the next 24 months is somewhere between 30 to 35%.
30 to 35% PAT margin.
That is our target.
Okay. And you mentioned, right, I mean, we have approvals in all the big houses. I mean, Marvel, Netflix, Sony, Amazon, Hotstar, Paramount, Apple, right? We right. have our, and we are one of the very few among the peers who would have approval with such big names, right? So ideally, I would believe that for you to scale up the direct project would be much easier, right, as compared to any of your peers? Is that the right understanding?
Absolutely. So, we've crossed the biggest hurdle, which is of approval. Once we've crossed this hurdle, now the next logical extension for us is to increase our share within the pie of that client. Okay. So let's say a Marvel or a Netflix or a Disney. We are getting an X share because we are based only in India. Once we set up this team in US and Canada, we are able to bid for and bag larger projects of theirs, which have more creative demands. Okay. So obviously, you see the industry, the majority of the work, I would say 80% of the content is produced from these 8 or 10 players worldwide.
Correct.
And luckily, we are approved by all of them.
Correct. But do you see a... please continue.
Yeah, so today we have a much smaller pie from within these players. Now we have to try to increase our pie within these players.
Correct. So, do you see that our capability can be a constraint? I mean, in terms of our, you did elaborate on the hiring talent and all, etc. But in terms of the technical talent, I mean, do you see that can be the constraint, or was the constraint in last 1 to 2 years which didn't allow us to increase this share in spite of having these approvals?
Absolutely. So it's not only our creative talent. So certainly, this industry works in certain weird ways, but then that's the way it works. I don't know whether you're aware, but there are certain regions in the world which offer tax credits as well. So, there are 2 things that stop us from, getting those larger projects. One, lack of super high-end creative talent in India in terms of, let's say, a visual effects supervisor who has, supervised, the Marvels or, Wakanda Forever. So, a visual effects supervisor who's been the supervisor for that, obviously has what it takes to then supervise any level of visual effects. That is one. So we are now hiring those level of people in our, teams in Montreal and Los Angeles. Second, it is a very standard industry practice where studios, let's say Disney is making a movie, they are instructed to make certain spends in certain regions to benefit from the tax credits and for the commitments that they have to make in that region to avail of the tax credit. I don't know if you all are aware of this tax credits business or no, but I'll just give you a quick brief on that. That certain countries like Canada, UK, certain regions in Eastern Europe, even UAE, they offer rebates in the form of tax credits. So if you spend $100 in Montreal, the Quebec government gives you back $40 in terms of a rebate, and they actually give that physical money.
Okay.
So a lot of productions have directions from their topmost level because they have to commit a certain spend in that region. So let's say if there's a movie which has, let's say, $10 million VFX spend. They're directed that they have to spend $2 million in Quebec, $2 million in this region, $2 million here, and then they can send so much to India. So while India would have been probably the cheapest, but because they have to meet certain production spends in that region, so in the terms of physical production, post-production, whatever. So that will also then benefit us because Quebec, we are forming our setup in Montreal, and Quebec, the state of Quebec offers the highest tax rebate in terms of a state in anywhere in the world, literally, up to 40%. That is why a majority of the visual effects studios in Canada are in Montreal, and most production houses are wanting to go to Quebec-based companies for that tax rebate share of their spend. So that also automatically gets us quite a bit of revenue just by being based in Quebec.
So after this subsidiary now that we have set up, right? So now it will be much easier for us to get the work, right? I mean,
absolutely.
So this is a very fair point. I mean, I was not aware of this rebate part. I think this would help you substantially. So just my last question. So in terms of top line, I think you did mention that we will look to get past this 50 crores, 50 maybe 55 crores. But how do we see the trajectory on FY25 and 26?
So FY25-26, we haven't declared publicly yet. So we would want to, do our internal working for that. So I don't think this is the right call for that.
Okay, and but at least I mean the traction that we have been seeing for last 2 to 3 years. So that traction we can expect to continue.
Oh yes, absolutely. Probably more.
Probably.
Our speed is only going to increase.
Right. Fair enough. I got it. I think all the best to you. All the very best. Thank you so much.
Thank you so much. Really appreciate it.
Yeah. Thank you.
Thank you. The next question, before we take the next question, a reminder to all the participants, anyone who wishes to ask questions may please press star and 1 now. The next question is from the line of Rahul Dasani from Mittal Analytics. Please go ahead.
Yeah, I'm audible.
You need to speak a little louder.
Yeah.
Just a bit. Yeah, is it better now?
Yes.
It's much better, yes.
Okay. So, first of all, good morning, sir. According to your previous statement, you said that the international production houses do not trust Indian firms as much. So, you being audited by almost majority of the production houses internationally, isn't that enough?
So the audits that these international companies do is not a creative audit. It's more of a security audit. And even PPN really does a security audit. There is nobody who can do a creative audit. Creative people keep changing. So there's no question of trust or no trust based on that audit because that's not a creative audit.
Okay. And secondly, you said that you can 3x to 4x your ticket size as and when you set up offices there. So is it solely based on the 40 employees and their contacts?
See, it's not only 40 employees in the contact. You must understand that when I'm bidding based on Indian-based manpower versus while I'm bidding on the same shot on a Canadian-based manpower, just because of the dollar parity itself, my cost of that shot is probably 6x to 7x automatically. Right? So if an American company gives that same shot, just hypothetically, where an Indian company would do that for $100, just because I'm based in Canada, my cost would be $1,000 for that because of the cost of manpower out there. Why does that American company give that shot to Canada and not to India when India would do it for 100 and Canada would do it for 1,000? As it explained back, they have certain commitments based on a global level rebates that they get on the projects. So they have to make certain spend in that region to avail of those rebates, not only in post-production, but also in production on a global level.
Okay, that's not helpful. Lastly,
the dollar parity by itself creates a huge impact on, I'll tell you as an example. Average artist in India, we calculate, certain revenues per artist per year. Same job done by an artist in US and Canada could be anywhere between 8x to 10x of that revenue per year. Not because that person is more, active and can deliver better, but just the salary structure.
Okay, got that. Lastly, what percentage of our employee base is currently into roto and paints?
What percentage of our current employee base is in roto and paint? It's a great question. Yes. I don't have the exact number, but off the head. So what means is our employee strength can mean two things. Global employee strength, that is of the company, or are you talking of production, revenue generating artists?
Revenue generating artists.
So within revenue generating artists, almost, I would say, 70% of our team is roto and paint.
Yeah. Sorry to confirm, but 70%?
70% of the revenue-generating artists are roto and paint. The remaining 30 are compositors, camera tracking, match move.
And lastly, where would that number be post the expansion, increase in employees and all?
So post the expansion, obviously the compositing team would increase substantially. Roto and paint obviously are key services within the entire short delivery pipeline. So even if there is compositing, there is roto. So it's not that, if compositing increases, roto goes away. Roto is a support service to compositing.
Okay,
as our compositing work increases, roto increases also proportionately.
Okay, so just to confirm it, you don't get standalone roto projects. It's complementary to your other services.
No. Today we do from outsource. When we do outsource work, we get just roto, just paint, just camera tracking, just matchwork. But when we do direct projects, we don't get just roto, just paint. It is the shot by itself. So direct projects, we do the compositing. So when we bid for direct projects, we don't bid, okay, roto is so much and paint is so much. We bid for the shot, the entire job that's involved in the shot, which is the end product, which could be compositing the shot, maybe. And that in the roto and also that is internal.
Okay, got it. That is all for me. Thank you very much.
Thank you so much.
Thank you. The next question is from the line of Sandeep Dixit from Arjav Partners. Please go ahead.
Thank you, sir. Just wanted to understand all the investments in people you are going to make in the US, in US, and
Sandeep, you're not clear. You're not audible.
Sir, your voice is muffled. May we request you to
is this signal better?
Yes.
Okay, thank you. Sorry for that. Just wanted to understand, can you put some numbers on the increase in employee costs? With these new hirings in the US and Canada, so you had 90 crores the first half as your labor costs, right? Employees plus technical contractors. What is that likely to go up to? And
sorry, I for some reason it gets muffled for me. Can you just repeat that, please?
Yes, sorry about that. I said that what would be, can you put some numbers to how much your staff costs, labor costs are going to rise? It's about 90 crores in the first half.
So see, our India costs are not going to rise substantially over the next 6 months in terms of percentage of revenue. Our international costs, obviously, but that is going to be in the subsidiary. All those costs are going to be in the subsidiary because they're going to be employed by the wholly owned subsidiary of Digikore Studios.
Right, but I mean, I'm looking at it on a Concall basis.
Digikore will not increase in terms of percentage.
But on a consolidated basis, it will, right? So what would be that increase?
So see, if you're hiring a team of the next 40 people, that I say is going to be progressive over the next 6 months. It's not going to have it from day one. So a very conservative number also, let's say post-March, because that's just when we have, let's say financial year 24-25. It's going to be 40 into an average of 10,000. It's going to be a salary cost of around $400,000 to $500,000 a month in our subsidiary.
$400,000 to $500,000
a month.
For all those 40 people together.
That is correct.
Right. So we are roughly talking about a jump in labor cost of about $6 million.
That is correct.
And incremental revenue for those will be in what range?
We are yet working on our projections for 24-25. So that's why I just said, sometime back that this is not the right forum because unless we don't finalize that, we cannot publicly disclose that.
Fair. Can I assume just for that we will have roughly on a consolidated basis, roughly the same percentage of labor cost to revenue? Will that rise? Will it affect margins? That's what I'm trying to understand.
Yes, our margins are not going to get affected on a consolidated basis. We are going to be extremely careful of not forget affecting. Our goal is towards increasing the margin because we just spoke some time back that over the next 12 months, our efforts are to increase direct projects rather than outsource. Secondly, the team that's based out there, we cannot do outsource work with them, obviously. So they're going to be always be involved in the direct project side of it.
Understood. Understood. So just to summarize my understanding is that there will be some lag because of the costs will come in first and maybe revenues will follow later. But on a sustainable basis, you will see a 35% net profit margin by FY25, FY26. Am I correct?
Absolutely. The lag is going to be there because the objective of the IPO was to spend in strengthen our teams, and that is the idea of working capital. So the idea of the fundraise is to strengthen our teams, not only in India, but also in North America. There is going to be a lag, and that is the reason for the capital fundraise.
Understood. Thank you very much. That's my questions.
Thank you.
Thank you. We'll take the next question from the line of Pranay Jain from Deal Wealth Capital. Please go ahead.
I wanted to understand that our focus remains on overseas projects, but animation and VFX work in some of the domestic movies has been increasing quite a bit in the last couple of years. Also, the OTT content here in India. So, are we finding any attractive work over there, or is there a conscious decision not to enter here because maybe the payment terms are not as lucrative, or whether the value of work is not as great? Wanted to understand about the domestic piece.
I'll give you an answer for that. The amount of content produced in Hollywood is probably 1,000 times that of Bollywood. Probably more also.
Excuse me, sir. Mr. Moore, your voice is breaking, sir. Can you please repeat that?
Can you hear me now?
Yes, sir. There is a breakage. Give me a moment. Yes, sir. Could you speak now?
Can you hear me now?
Sir,
it's still breaking, actually.
Yes.
Yes.
Sir, give me a moment. I'll connect you back. Can I connect you back, sir?
Sure.
Thank you. Ladies and gentlemen, please hold the line while I disconnect and connect Mr. Moore again. Give me a moment. Ladies and gentlemen, thank you for patiently holding. The line for Mr. Moore is connected now. Over to you, sir.
Yes. So, the amount of content that's produced in Hollywood and different parts of the world is 1,000 or more times than what Bollywood produces in terms of value. And obviously the visual effects basket is again the same. So we have one advantage at a location and one disadvantage at a location. So our biggest advantage is that, we have, crossed that entry barrier into Hollywood, which we have spent 13 years by getting all these approvals, where more than half the visual effects studios in India do not have them. So they do not have access to that market. So that's our advantage. We want to play that to our advantage. So even if we are able to get, over the period a 5% pie of Hollywood, that's, several $million in revenue for the company. That's over $100 million in revenue for the company. At the same time, Bollywood, the whole of Bollywood probably spends only $100 million in visual effects every year. How much of that pie we are going to get in a market where we are at the back of it, because the leaders are the ones who are based in Bombay and South who have a presence there. And the pie is also very small. We are based in Pune. Strategically, we don't have that advantage to get into Bollywood. We would have to set up a facility in Mumbai, not that we are averse to that. But we do believe that the growth rate and the numbers that we want to achieve, for us to achieve those exponential growth, that can only be done where the pie is very big. That means the pie is worth a few $1 billion, which is Hollywood. We have a huge strategic advantage out there compared to our competitors. And it's logical to make make use of your strength rather than your weakness. So we chose to take use of our strength, and that is why we want to focus on Hollywood and international markets.
Understood, sir. And you mentioned earlier on the call that there are some regions which offer tax rebates, therefore incentivizing more VFX work over there, where Quebec is the highest globally. Which are the top 5 hottest regions in the world where such work is increasing? And I believe that Indian companies like us would also grow presence over there over time.
Oh, yes, absolutely. So within Canada, every state has its own tax rebate percentage, but all the states do offer. That is Quebec, British Columbia, all of them have their own. British Columbia is around 35%, which is basically Vancouver. So all of the states out there offer. London, UK offers tax rebates. I think so it's 25%. The Eastern Europe, Hungary, they offer around 30%, I think so. Saudi Arabia has now started offering 30%, so they're really pulling in a lot of people to film in Saudi Arabia. UAE also offers tax rebate. So a lot of regions around the world offer tax rebates, and that is why you see a lot of production is moving out from LA. Most visual effects studios are shutting doors in LA because it just doesn't make sense for them to operate there any longer.
Got it. This is insightful. Thank you for sharing.
Most welcome.
Thank you. The next question is from the line of Aditya Shah from CJ House. Please go ahead.
Hi again.
Hi, Aditya.
Hi again. Just on this tax rebate part only we've been discussing, you mentioned that the tax rebate would be, let's say, 35-40% on the best case, but the cost of the production itself will be 5 to 7 times. So not being able to understand how does that make feasible sense, right? If something in India we can do for 100, outside India and even let's say Quebec will cost you 500, 700, and a 40% discount on that, assuming the entire thing you get a discount.
No, because you're looking at it only in the perspective of VFX.
Okay.
When a Netflix goes to, let's say, Quebec or British Columbia, it's not only about the VFX. Let's say they're also filming there. They're doing the edit there. So it's a global budget pay. They have to make a global budget spend to get the tax rebate. So what happens is they also push in the VFX into it. And that show the VFX maybe are losing, but on the other end, we are gaining out of that.
Okay, got it. And if you have, let's say, so the production house will get the tax rebate, right? Not the studio itself.
No. So the tax rebate works in such a way that if Netflix has given the work to Digikore, Digikore obviously provides the paperwork to them, but the government pays Netflix direct. We get paid in full, and Netflix, after some time, the government pays Netflix the money back.
Got it. And then they'll pass on whatever it is for you that we can.
We get paid for our services in full. For us, it doesn't make any difference. Whatever we have bid, we get paid for that.
Okay.
They don't pay us after they get paid the rebate.
Okay, got it. And for if we, let's say, if Digikore is setting up a studio in Quebec and billing Netflix, while the back-end work is being done from India, however, the billing entity is your studio in Quebec, your subsidiary in Quebec. Does Netflix still get that tax advantage then?
No. It's a very strict thing out there, and we don't plan to cheat even 1%. The rebates are only for Quebec resident labor or actual spends which have happened. So today, let's say, what you're saying is right. It does happen, and a lot of companies have, even global companies like Technicolor or BNEG and all, have several offices. So if we get a project, a lot of paperwork increases at our end because, let's say, if in that project, certain tasks have been done in Quebec and certain tasks have been done in India. We have to give the full declaration with costs, with proof of what has been done in Quebec, what has been done in India. So then Netflix will only go to the government and ask for rebate for the tasks that have been done in Quebec by Quebec residents. It's not also, another thing is that I cannot take an Indian guy and make him sit in Quebec. That person has to be a Quebec resident.
Okay. Understood. But I think for what it sounds like is, while that will help that will help us be sort of a foot in the door where at least we'll develop the relation, and then whatever we can do in Quebec, we do that, but it will help us do cross-selling into India.
Oh, yes, see, because all the companies do it. It's not that today if I take a $10 million project from Netflix, the entire 10 million is done in Quebec. They all know that the 10 million ka probably 6 million or 7 million is done in Quebec, 3 million is done in India. And they also tell us that, okay, so much has to be spent in Quebec and this much you can take to India, which is, it's all, planned. Nobody cheats anybody out here because, it can be really harmful to the business. We are very, careful about that. So there are proper auditors who will come and audit all of this.
Got it. And just one last question was on the margins part. One is, what do we feel would be, some sort of sustainable margins going ahead on the EBITDA side?
You're talking of EBITDA or PAT? Because so far we've been talking PAT, so I'll just continue on PAT.
Yeah, sure.
For the benefit of everybody. So I did mention sometime back our endeavors are towards taking the PAT margin to somewhere between 30 and 35 on a long-term basis.
Got it. And on the same point about margins, if let's say, let's take a constant case of, let's say, subcontracting. If we're doing compositing or something a little more complex versus green screen and roto work, which is a little, more generic, what is the kind of, difference in revenue we get per man-day, like 10%, 20%, or is it similar?
Compositing can be twice that of roto.
Oh, okay. So
but also the people are more expensive.
Understood. Fair enough. And obviously, subcontracting, and that part was clear. Okay, thanks a lot, sir. I think this is all I had for you. Thank you.
Most welcome.
Thank you. The next question is from the line of Sandeep Singh, an individual investor. Please go ahead.
Hey, Abhishek, Sandeep here.
Yes, hi Sandeep.
You and your entire team for the listing.
Sandeep, I'm not able to hear you clearly.
Mr. Singh, your audio is not clear.
Yes.
Can you use your hand?
Let me try. Yeah, let me try one thing. Is it any better?
It's a little better.
Okay. Let me try a little louder. It's a little mid in the night, so if it is not good, then I'll probably discontinue. But anyway, congratulations to your team and on the listing as well as fantastic H1 results. And Abhishek very well explained. In fact, most of the points which any investor would have liked to know, you have already explained in great detail. So many thanks for that also. I'll probably take a little off question around the capital allocation policy or intent of your company and you as the CEO or founder. Do you have any intent to go into production side of business or distribution side of business? Because that will be quite a bit of distraction for some of us as an investor who think of Digikore as an asset-light business. Probably some of us are also comparing this industry with IT industry, right? Which is always, I'll say, cash-generating business. Obviously, in hyper-growth phase, you need capital for setting up offices, working capital, cycle increases, and all those sort of things. But those are part in long run. Yeah.
So it's not about planning to go. We have sort of ventured into that, but we don't plan to do fictional content, or we don't plan to produce movies where we've made an investment first and then we are waiting for the returns to come in. As a policy, we have only got into branded content production. So we get paid by people to make content for them. So it's literally like a service, but we own that content. It's a zero risk because it's not, our money is not invested first and we are waiting for returns to come. So if you're going to see where, we are doing only branded content.
Fantastic. And if you allow me to be a little more direct and say, right now your board, your name is all over India, right, on those billboards. I'm assuming that advertisement cost, etc., is part of the project, not coming from Digikore balance sheet.
I'm sorry, what's that?
Right now your name is all over India, right, on those billboards, especially with these shows which are coming up.
For Indian Angels, that is correct, for Indian Angels. But all this is something which is not been invested out of pocket. This is all a part of the branded revenue that we have received. So Indian Angels by itself, is already a profitable project. Even, we're not waiting for revenues to come on this project. We've already received the revenues to a large extent. The sponsors, the hoardings, the newspaper ads and all that you see, that is all sponsored by other people. Technically, we haven't spent for that.
Fantastic. I mean, that was my understanding, but thanks for confirming also that actually,
we haven't spent for any of that advertising. It's all come from sponsors.
Okay, fantastic. I think that's it.
Thank you.
I'll give it to the next.
Yeah. Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all participants in the conference, may we request you to limit your questions to 2 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of it's Arun Kumar, an individual investor. Please go ahead.
Hello. Am I audible?
Yes, sir.
Yes, Arun, you are.
Yeah. So, Mr. Abhishek, congratulations on the set of numbers you have.
Thank you.
I have a very simple question. As I was able to review the financials, there is a sudden jump in the net profit ratio. So is it because of the quantum of projects coming more from the international market, or there's some another working behind it, or you save some costs and manage good profits?
No. So, A is, if you look at that 22-23 numbers versus half year 24, there is no major jump in the profit ratio. Yes, pre-20, let's say 21, 22, 22, 23, 2021, 21, 22, where our dependence was more on outsource. But over the last 2 or 3 years, if you see, our revenue has also increased substantially because of our move and real focus shift from purely outsourced to getting direct projects. And like I've been saying all this while, the direct projects offers much better margins compared to outsource. And that is why you're seeing not only a revenue jump, because all of this approvals of most of these studios from Disney, Marvel, Warner, all of this have happened really during COVID. So if you see the jump of revenue also, it is post-COVID, and jump in margins also, it is really post-COVID.
Okay. My last question is, as you mentioned that you are planning to hire some people in your international subsidiary. So do you plan to hire them on a remote basis, or there will be some physical offices that will be setting up and there will be added costs for those as well?
Currently, obviously, it's going to be like a fully functional company. Currently, the talks that we are having with our teams out there is that the operations is going to be remote, not because we want it to be remote, but because most of the talent out there has now got too used to working remote. Unlike India, where most people stay within city limits, it's a very general, way life works in larger cities abroad. Is that within city limits, it's typically the commercial establishments, and most people stay an hour away, hour and a half away. People are too used to now, living out there in their houses, and it's not only us. Most VFX studios in most parts of the world outside India operate remote. So we have no option, because if we try to pull people into the facility, we may not get good talent.
Got it. That helps my answer.
Thank you. The next question is from the line of Anand Patel, an individual investor. Please go ahead.
Hello, am I audible?
Yes, you are.
Yeah. So, sir, I want to understand regarding this content production. I think we are get paid around 20 to 30 lakh per episode. So, what is revenue potential for this, and what are the margins in this?
No, so that's what I'm saying, that our model of content production is not like what you are thinking or what most people do. So we are not on margin basis. We are not doing this content production for Jio. So Jio does not own the show. Jio does not pay us anything. And it's not that we get a percentage of what Jio is paying us. Our shows are very uniquely made, and we plan to only do those kind of shows, which is called branded content, which is advertiser-backed content. So once we have our sponsors and advertisers on board, we create the property. Our margins, depending on show to show, can be as high as 50%. Obviously, considering the company margins that we want to keep, we typically are creating shows which are going to be giving us minimum 25 to 30%. Our endeavor is to do shows which are giving us 50%. We own the IP of our shows. So it's not like your regular fiction shows where a channel would commission it and they would give you, let's say, 25, 30 lakhs per episode, and most people out there get margins of only 7 to 10%. But our shows are structured differently, and that's why we enjoy good margins in our shows. And we plan to continue only those kind of shows and not commission shows, because that will kill our margins.
Okay, so I just want to understand that can it be a drag on our VFX business margin? That's it.
I'm sorry?
So I just wanted to understand that can it, the content production be a drag on our VFX margins?
No. It will complement and in fact help better over a period of time.
Okay. And sir, my second question is regarding AI. Is AI risk to Roto and the general work, which is 70% of our, top line?
See, AI is a risk to every industry. So let's face it, we cannot fight technology and we cannot fight change. The only thing constant in the world is change. Either we can fight it or adopt it. We have learned to and chosen to adopt it. We are using AI to our advantage. Yes, it will lead to, in the short term, it may lead to certain loss in jobs. Not to the company. The company will not get affected. For the company, it will be a benefit only, because I am able to now get that same job done by one person, which would take 5 people to do. So when a technology is a threat, it is a threat to the job industry really, and not to the company by itself.
Okay. And can I ask one question more? The international overhead, just to confirm, you said it's around $4.5 lakh dollar per month, per year.
For what?
International employee cost is around $4.5 lakh dollar per month or year, sir?
No, per month, but these are all estimations, right? We haven't hired those 40 people. Once we hire, somebody asked me what to be approximate, so these are approximate numbers, but that is per month.
Okay. Because
we yet have to prepare our projections and projected P&L for 24-25. So these numbers, please, they have no value today because we haven't prepared our P&L for 24-25. So these are probably just numbers in the air right now.
And sir, I saw the advertisement of this supervisor or manager in LA hiring. So have we already recruited, or at what stage is it?
So we are in the process of closure with several. We are discussing with almost quite a few people in LA and Montreal. So we will be hiring them very, very soon, before the end of this year. The key talent.
Oh, I just want to share a good news that the strike is already over and it is in the news.
Oh, great. Fantastic. Reason for all of us to celebrate.
Okay. And sir, so what are the usual lag period when we get orders after the strike is over?
After the strike is over, there are going to be projects which are going to go on floor like almost immediately, because they are, the script writers have been working for a while. So that projects are of different scale, projects are of different sizes. The larger projects may take maybe 2
But mostly episodic will go on for immediately, I think.
Plus, you must understand that there are several projects which are at different stages. There could have been a project which is just towards finishing filming when, the strike happened. There is a project which is midway through filming. There is a project which hasn't even started filming, not several, hundreds of projects. We foresee that we'll start, maybe November is the only month where if there could be an impact, there will be. But from December onwards, we'll start, getting work on it.
As you said, we have no order book for this January onwards, so I just want to...
Historically, because it's not because of the strike we don't have order book. In general, our business, since it is outsourced based, we don't have order book of projects. We have clients who have been giving us regular work.
Okay.
It is not because of the strike that we don't have an order book.
Okay. Thank you, sir.
Thank you. The next question is from the line of Aditya Surana, an individual investor. Please go ahead.
Good afternoon, sir, and congratulations for the good set of numbers. Am I audible?
Thank you. Yes, you are, sir.
So what are the trend of big VFX companies subletting work in India? Is it increasing?
Absolutely. The trend of VFX, coming to India is definitely increasing.
Can
as
you quantify that in...
I'm sorry?
Yes, sir, go ahead. Yes, sir, go ahead.
I can't quantify. I don't have a percentage of, US to India, how much per year the growth has been. I don't have that number, and that's why I'm not in a situation to give you an answer for that. In general, we see that, more and more studios are coming up, which is great. Majority of them have a lot of work, which is even better. The kind of data that we have from the projects that are in the pipeline, which are, going to be filming, that there is substantial amount of work, in this industry because, we have vision on the projects that are going in production, which are going to go into production from the majors over the next 2 years, 3 years. There are, if you look at it over the next 3 years, if you just look at series, there are going to be over 2,000 series produced, seasons produced over the next 2 years. It's a lot of work. It's now up to a person how much of that they can get.
Okay. And so one more question. What are the differences in the margin if we take the direct project or if we take the outsourced project?
Typically in outsourced projects, we have seen that the net margins are in the range of 10 to 12%. If you're lucky on a project, maybe 15%, but it's rare that in outsourced the margins are more than 15%. And but now that we also have, long-standing associations with so many of our clients, they know the work that we do. They know that the team that we employ, obviously there are costs to that. Okay. Secondly, in this also there are different things, by the way. So today, if I'm doing an outsource, so let's say a Technicolor, which is a Disney, approved VFX vendor in the US. If they get a Disney project and they have to outsource bits and pieces of that, in that I'll get much better margin because every studio in India cannot do that because even that VFX studio has to be Disney approved to be a vendor of Technicolor for that. So since their basket of offering of studios in India is much lesser, I get better margins in that. So it's not fixed. It really depends client to client, project to project. So there's no fixed ki itna hi margin milta hai.
Okay, thank you. And Dr. Diwali.
Thank you. The next question is from the line of Jitesh Parmar, an individual investor. Please go ahead.
Yeah, hi. Thank you. Congratulations, sir, for the great set of numbers. I just have a few questions. Sir, the exchange do not mandate us to, have a quarterly result disclosure. Okay, it's half yearly, but there are trends that a lot of the SMEs do that. Okay, so do you have any plan to, do quarterly disclosure?
As of now, we are moving towards quarterly disclosures. We are doing our best so that we can do quarterly disclosures. We do understand it's not a mandate, but in investor interest, we have been discussing internally, and we will mostly be doing quarterly.
That would be great, sir. Thank you. Sir, and, in terms of our business, okay, and just wanted to understand it a bit better, do we have any split or seasonality like H1, H2 split or, like quarterly? I understand we are in the, in the growth trajectory, okay, but just wanted to understand what you have experienced in the past, okay? Do we see any sort of seasonality or split, okay, let's say between H1, H2 or on quarterly basis, if you can share that?
Not really. Historically, the only time that we see the work slows down is, 15 December to 15 January.
Okay.
Otherwise, it's very rare because most of US and Europe is on, their Christmas break at that time. So that's really the only time. But this year we don't foresee that because a lot of people have spoken to and they all, want to work in that period because they have a lot of cover-up to do.
Yeah,
that's it. They have a lot of cover-up to do on the project side. A lot of people who've not been paid for months, they want to earn some money. So we don't estimate that break to be there this year.
Okay, sir. And sir, like you mentioned, this is more like a relationship-based business rather than order book. Okay. So just wanted to understand what would be the size of our, business development team. Okay. And what we aspire to see that in, next 2-3 years. Okay. Who is, actively, kind of looking for these contracts.
So see, in this industry, while you have a couple of people maybe who are dedicated to business development. Technically, anybody senior is business development, indirectly. So my VFX supervisor, whose job is as VFX supervisor, but he's also indirectly doing business development only. Because if he has been supervising VFX as a VFX supervisor for several projects, and there is a producer, VFX producer or a director who's worked with him in the past, and where he has VFX supervised the projects, there is a good chance that he will call him that, hey, I'm doing this project, I would want you as VFX supervisor. If you come as VFX supervisor, Digikore comes as company automatically on the project. So in these senior level positions, whether it's VFX supervisor, whether it's VFX producer, whether it's studio head, whether, it is the creative head, COO, they all are technically business development.
Sir, so if that is the case, okay, and if this is, just wanted to, understand it a bit better. If it is, a bit ad hoc, okay, what sort of risk we see, okay, in terms of the business, okay, in terms of, kind of on a continuous basis, okay, if we want to see more established kind of, permanent.
It's not ad hoc. Like I said, that there is a business development team that does their job, and their job is, I'm saying, these are all add-ons. While the business development team does its job, these are all other sources of business development.
Okay. And what would be the size of that business development team? Okay, that is a dedicated one?
Typically, most studios would have one senior executive producer who's the main person who's, bringing in the job, and would be supported by a couple of juniors, and that's the same structure that we plan to have.
Okay. And then do we see, if it is a small size team, do we see a key personnel risk in that case?
Any business obviously faces key personal risk, but, it's our job as a company to ensure that, the team is happy, they're motivated, and they are well incentivized for the work that they do. Even in India today, we have certain key talent who have been with the company for 8 years, 10 years. Any company faces, key talent risk. But we have to just try to have a backup plan, cover it up, that, so that, tomorrow if a person leaves, there's nothing that you can do when a person wants to, leave the company and do something else. We need to have a backup. And even, it's a general business practice. Even in India today, we have so many people. People come, people go. So we are used to creating backups for exits.
Okay, sir. My last question, if I may. Okay. So, do we see any sort of, payment defaults on this, contract? And if yes, if you can put some color on that.
So far, we haven't really experienced payment defaults. Among my 14 odd years in visual effects, I've experienced a payment default only once. That also because that company went bankrupt during COVID. And that was a client of ours for almost 6-7 years. The trust factor was always there, but when a person goes bankrupt, it's a very difficult situation. Apart from that, Touchwood, Hollywood, and our international clients, we've never experienced a payment default so far.
Okay, that's great. Thank you, sir. I'll get back into the queue. Okay, thanks for the answers. Thank you.
Thank you.
Most welcome.
Ladies and gentlemen, this will be the last question, which is from the line of Pranay Jain from Deal Wealth Capital. Please go ahead.
Thank you. Just two short questions. One, our trade receivables as of first half this year are around 15 crores versus 6 crores in full last year. So just wanted to understand from the time we bill for the services, in how much time do we collect the revenue? What is the average collection period?
Average we are experiencing today is around 80 days after billing for collections.
Okay. All right. And the second bit is, as you have indicated, with the quality of work increasing and more direct large value projects coming in progressively, what is our average ticket size of the projects? I mean, want to understand 12 months back, what was it, and how has it evolved this year, and how do you see it progressing over the next 12-18 months, if you could give us that picture?
Yes, absolutely. So every year on year, our average ticket size of the projects are increasing, no doubt about that. As on today, if you look at an average of last year for the direct work versus today let's say when I say today means 23-24 of direct work, I would say our average ticket size has increased by almost 50%. Once we have the team in North America, our average ticket size will actually increase by 3x to 5x in terms of ticket size per project.
So currently, what's the average ticket size?
It's in the range of, for direct projects, you could say it's a very average ballpark is around $200,000.
And this is usually executable over 4 to 6 months?
Yes, that's correct.
All right. Thank you so much and all the very best.
Thank you.
Thank you. Ladies and gentlemen, as that was the last question, I would now like to invite Mr. Gopal Chandak to give his closing remarks. Over to you, Mr. Chandak.
Thanks everyone for joining the conference call of Digikore Studio Limited. If you have any query, you can write us at info@kirinadvisors.com. Once more, thank you everyone for joining the conference.
Thank you everyone. It was a pleasure speaking with all of you and really appreciate the time you have taken to join the call.
Thank you, members of the management. Ladies and gentlemen, on behalf of Kirin Advisors, that concludes this conference. We thank you for joining us and you may now disconnect your lines. Thank you.